All right, we don't normally do this on a Sunday, but let's be real, this weekend completely changed the game. Coordinated military strikes in the Middle East have sent a massive shockwave through the global economy. And with markets set to open in just a few hours, there is one question on literally everyone's mind.
You know, the answer to that question really gets to the heart of how interconnected and maybe how fragile our whole global financial system is. So we're going to break down exactly what happened, why it matters so much, and what all the experts are watching for when that opening bell rings.
Okay, so first things first, what actually went down? This wasn't some random event out of the blue. Nope. This was the culmination of weeks of military buildup that, yeah, markets were watching, but maybe not fully pricing in just how serious it was.
Let's just walk through the timeline here. In the middle of February, a second U.S. carrier group showed up in the region. That's a rare and incredibly powerful signal. Then, on February 24th, 12 F-22 fighter jets landed in Israel. Now get this, that is the first time the U.S. has ever deployed these specific jets directly to Israel. The message couldn't have been clearer. And then, boom, on February 28th, the strikes happened.
Iran's response was, well, it was swift, and it was aimed right at the global economy's jugular. A broadcast, apparently from the Iranian Navy, went out to every single ship in the area saying that transit through the Strait of Hormuz was, and I quote, suspended. And that one word, suspended, is what has the entire world holding its breath.
And that leads us straight to the first and most immediate ripple effect, the impact on oil. And it all comes down to this one tiny little strip of water.
For anyone who's not familiar, the Strait of Hormuz is this super narrow waterway that connects the Persian Gulf to the open ocean. I mean, at its narrowest point, we're talking only 33 kilometers wide. But its strategic importance, it is almost impossible to overstate. Think about this one number, 20%. 1/5 of the entire planet's daily oil supply, plus about 1/4 of its liquefied natural gas, has to pass through that tiny choke point. So yeah, if it closes, the supply shock would be immediate and absolutely massive.
So when the markets open, traders have their eyes on three big things. First, is this Hormuz closure for real or is it a bluff? Second, what's OPEC going to do? Will Saudi Arabia step in and announce a production increase to calm everybody down? And third, is the White House going to release oil from the Strategic Petroleum Reserve? The answers to those questions will decide if oil jumps $5 or 20.
But look, this shockwave, it didn't just stop with oil. Oh no. See, in times of extreme geopolitical fear, money flees. It runs away from risk and rushes into assets that are seen as safe. And the ultimate safe haven has always been gold.
There's this quote from the source material that just perfectly captures the mood right now. The thinking isn't just that prices are going to go up, it's that the entire way we value gold has fundamentally shifted. That price we saw on Friday, that wasn't the peak, that was just the beginning. This conflict is basically throwing gasoline on a fire that was already roaring.
And you got to remember, gold was already up a staggering 18% this year before a single shot was even fired this weekend. The market was already sensing the tensions were rising. This weekend's events just confirmed everything it was worried about.
You'll hear analysts calling gold the cleaner trade compared to oil. And here's what they mean by that. The price of oil can be stopped in its tracks by an OPEC announcement or an SPR release. But gold, its price is driven by fear itself. Pretty much every scenario you can think of. Escalation, long-term tension, even a shaky ceasefire is good for gold. Only a sudden lasting peace could turn it around. Okay, so from oil and gold, let's follow that ripple out to the big one, the stock market. This is where things get a little more complicated. A war premium on oil doesn't hit all companies the same way. There are going to be some very clear winners and losers here. So here's the deal. Look for airlines and shipping companies to take a hit, right? Because higher fuel costs just crush their profits. On the flip side, defense stocks and big energy producers will probably surge. And what about all those high-flying tech and growth stocks? Well, they tend to suffer the most when investors get scared. In what's called a risk-off environment, money flows out of speculative assets and into safer things. And that can really hurt the tech sector. All right, so the billion-dollar question, where does all of this go from here? Well, the source material lays out 3 different scenarios that experts are basically wargaming for the coming days and weeks. Each one has a different probability. The most likely path, with about a 40% chance, is that we see continued but contained escalation. That would push oil towards $88 a barrel. Next up, at a 35% probability, is a quick ceasefire, which would see oil prices fall back. And then there's the most dangerous scenario, at 25%, a full blockade of the strait. That could send oil screaming past $100,
and knock stocks down as much as 8%.
So let's just put it all together. These are the key figures that frame this entire crisis. You've got gold closing near $5,300 an ounce after an already historic run. You've got Brent crude oil at almost $73 a barrel before the strikes even happened. And the military hardware, 2 U.S. carrier groups in the region. These are the numbers that are going to define everything this week.
Which leaves us with this one final and kind of sobering thought. When you're talking about geopolitical events, there's really only one rule. The headlines can change everything in a split second. The situation on the ground will move way faster than anyone can adjust their financial position. So the question now isn't just about how markets will react at the open, but whether the world is truly ready for the volatility that's coming.